that, of course, are also making headlines here in South Africa, and the one that came out earlier this week, where South Africa has now got a combined total of 92 billion rand in loans from the new Development Bank, from the African Development Bank and the International Monetary Fund. In an article that was written by Dr Bheki Mfeka, captioned "Government Policy, Capacity and Sovereignty at Stake," The Economist says the analysis of the COVID-19 pandemic would have shown the government that the 500 billion rand stimulus package was not sufficient. The former advisor to the presidency says that South Africa needed more than R1 trillion to direct stimulus to deal with the economic bloodbath. However, going out to borrow from Washington reinforces a neoliberal policy position. This morning we ask whether the problem lies with borrowing generally or borrowing against Washington versus other financial institutions. Dr Bheki Mfeka, the director at SE Advisory and former advisor to the presidency, joins us via Skype. Also is Lullu Krugel, who is the Chief Economist from PwC. It is great to have both of you. Thanks very, very much for joining us.
Thank you, Leah. Thanks so much.
Thank you.
Pleasure, an absolute pleasure. Important topic this, and I think many people are worried, to say the least. So perhaps we can shed a little bit of light what it means, South Africa getting all these loans and getting into what many fear is a big hole of debt. Some believe we are really getting into this hole and it's going to take a long time to fix. What exactly do these loans mean for our economy? If I may begin with you, Dr. Mfeka.
Well, all debt is not good. It's only good when you use it properly. In other words, you use it for investment and, into productive capacity of the economy or into infrastructure. But any investment that is not directed at that or that can be abused through corruption and all those things cannot be helpful. It will burden the future generation. We can look at countries like Argentina, where they have previous governments, borrowed loosely in different institutions all over the world. It came to haunt them down the line. Even today, they are still bleeding and unable to meet those obligations. One thing good about going to IMF, they will push you to implement what you have said you're going to implement. It's a good loan. It's not high interest. And they will look at what the Minister of Finance has proposed and the Cabinet has accepted, as well as the ruling party has accepted that they will implement what is proposed in the strategy. So that's the scenario we're facing.
They monitor it very closely. Am I correct in saying that when you talk about the IMF, the money that they give you, they monitor how you spend it? Obviously, there was that letter written to the IMF in order for them to approve this loan that's been signed by the Finance Minister and the Reserve Bank Governor with conditions as to how they will use the funds. The IMF, do they monitor this very closely?
Yes, they do monitor very closely. That's one of the conditions for accepting the loan. They will assist you to solve your balance of payments problems or difficulties. And they provide technical assistance and all those things. In this case, the only difference is that they didn't prescribe the program. But Treasury came forward and said, look, we are prepared to introduce the debt ceiling. And also we are prepared to open up the market, especially around the state-owned enterprises and all those things. And the public sector wage, they're committed to that. And the IMF will be looking closely to that. Yeah.
Okay. Let me bring you into the conversation, Lula. Now, for a good period of time, after 1994, South Africa managed to take itself out of the apartheid government debt. So what's gone wrong? How have we found ourselves in this position again?
And I think if we look back to just after the global financial crisis, We were in a fortunate position at that point in time, as you say, that our debt levels were reasonably low compared to our peers. So that enabled government to actually spend some money, and it probably got us out of that initial crisis faster than a lot of other economies. But ever since then, there's been a gap between income and spending from a government perspective, with tax revenues being under pressure and expenditure growing much faster than tax revenues. And part of the reason is the fact that our economic growth has just never recovered 2008 levels. And we were just never able to fill that gap. So the gap became wider. Certain parts of expenditure, such as our wage bill, grew significantly faster than maybe inflation and, at the rate that the economy and our taxes were growing. So that gap just widened over time. Also, if you look at the expenditure plans that was put in place after the 2008 financial crisis, it just didn't have the desired impact in terms of economic growth. It just didn't generate the same economic growth that we were hoping for. And also, with each other over the last couple of years, we've had some challenges around corruption in the economy and administration that wasn't happening the way that it should, and also the pressure from SOEs and government having to push more and more money into the likes of Eskom and SAA, etc. Yeah. So that just meant that our debt spiraled basically from a level of around 28%, 29% of GDP, and actually times where we had a budget surplus pre-2008 to a level where we were in February of about 60 going to 70% debt to GDP, and now people are even talking about 100% if we do not manage to change the way in which we spend our money and if we don't introduce that debt ceiling.
Yeah, Lullu, just a simple way of looking at it, and I know that wherever you stand in circles and talk to people, this is what they're very, very concerned about, is the debt repayment, and that are us as South Africans, our children, their children, and many other future generations going to be stuck in the cycle of having to repay all of this debt? And that I think is a great concern of South Africans at this point.
Absolutely. It's interesting, a lot of countries around the world, we haven't started doing that, and I think we should. But a lot of countries have started to look at their fiscal sustainability, not in terms of what is happening right now, but exactly what you're saying, what this means for future generations. And I know, for example, the UK has been expressing their fiscal stability in terms of what it would mean for a tax burden for future generations. What would they have to pay back to make good for where we are now? So that is such an important part of what you mentioned. And just like any other debt, if it doesn't result in, if you look at a business, for example, or a household where we all have to, or most of us are in a position where we at some stage in our lives have to make debt to invest in assets. But if you start paying debt with debt, and if debt means that you are moving spending away from productive areas, it becomes problematic. And we're at a point where our debt interest payments are becoming so high that it's, I think, now about the second or third highest component, I think actually second, or it was in February, in terms of our expenditure. So that means that it actually moves money away from areas where it needs to be spent productively in the economy to create jobs, to grow the economy, and to pay social growth, everything else that we need to do, and invest in the infrastructure as well.
Dr. Mfeka, you've said that the analysis of the situation would have indicated to government that the 500 billion rand stimulus package was never going to ever be enough. If that's the case, what choice did we have other than going and taking these loans from the banks? IMF 70 billion, African Development Bank 5 billion rand, the BRICS Bank $1 billion. So that's the amount we're looking at, and still waiting, if I'm not mistaken, from the World Bank as well to get a loan from. Talk to us about that.
Well, the 500 billion amounts to 10% of the GDP, and the immediate shock to the economy is a moving target. Around March, we were thinking that the immediate shock is around 18% of the GDP, which now, because the lockdown still continues and more businesses are closing down and jobs are being lost, So the target is a moving target, not unless there is a clear understanding of how the economy will open up with clear timelines and targets. And I'm hoping that there are discussions behind closed doors between government and industries to look at the processes that can be followed to open up, including those that we're not fond of, like alcohol and cigarettes. The value chains, they are massive. So there needs to be a clear understanding of how we open up those industries. So if it continues like this, that means you may exceed 20% of GDP immediate shock, which will double the amount, the current stimulus package. If you look at the 500 billion proposed, almost half of it still goes to deal with the COVID and also dealing with supporting workers and recovery of businesses. So 20% of GDP goes to 1 trillion and above that is required to stimulate the economy. And also challenges around implementation.
Well, that's the problem. And also, as we know that we were in a very difficult position before the pandemic, and now the pandemic, and that has just thrown us over a cliff. But we need to pose this question because obviously, as we mentioned right at the beginning, there had to be a list of criteria that the government had to supply the IMF in order to get this and to cut government expenditure, because that is what is needed. The public wage bill, state-owned enterprises, possibly, keeping on bailing out these industries, now even starting up a new airline, throwing more money into that, the issues at Eskom, and the list goes on and on and on. But where's the cut going to come from? Because we need to see that happening. We haven't seen that happening as yet. So, our bill stays the same. We keep on borrowing money. How do we pay this off? So let me, Dr. Mfeka, if you don't mind, I'm just going to quickly come to you for that, and then Lullu, I'm going to come to you as well. But when does the cut begin? When are we going to see this happening?
Yes, I think the economists will differ there. There are those who favor austerity and those who favor expansion. I think the sources of cuts should be on inefficiencies and wastages and corruption, overpricing, and all those things. But to target the wages will be counterproductive because, and also retrenchments will be counterproductive because the money circulating in the economy, if those people who are earning that wage, supports their consumers in different sectors, and it all goes like that. So in essence, most of the monies, if you look at the municipalities, the Auditor General's report, you'll see that there's wasteful expenditure, there's corruption and incompetence. If you fix the capacity of the state and be strict on corruption, in other words, deal with the top corrupt people, you are bound to see a lot of efficiencies and more money available for the state.
Lullu, just a final word from you as well. And, we haven't even touched on corruption because it's one thing. And when you read the opinions of a lot of South Africans, if you borrow and the money that you get lands in the right hands of the people that are desperate and need it, because there are so many South Africans that are desperate right now, but they're not getting that money. They just are not getting the money because of the corruption that's standing between them and the money. And this is the problem. Let's talk to that.
Yeah, Leanne, I think that is a massive concern for South Africans. We've seen in April that when the president made his announcements initially about the funding that was going to be made available, that he said very clearly that would go towards the people that need it. And unfortunately, over the last couple of weeks, we've heard some stories about potential maladministration of some of the funds and potential corruption. All of that, of course, having to be investigated. But the fact that we need to say that we now need to investigate what is happening to that money, I suppose, puts a lot of South Africans in a position where they feel they hope that the money that is coming from the IMF and other places at the moment will actually land up in the right places.
All right. We have to leave it there, but we thank both of you for talking to us, just shedding a little bit of light on these loans that we've seen South Africa having to take. Of note, 70 billion from the IMF, the African Development Bank, 5 billion rand, and then, of course, from the BRICS Bank, we've got $1 billion. So a lot of money, and still we hope that gets to the right hands. Lullu Krugel, who is the Chief Economist for PwC, and Dr Bheki Mfeka, Director at SE Advisory, and discussing South Africa's newly obtained loans and the position that's going to put us in as a country. All right, it is 8 o'clock.